We are at the core of the energy world. If we want that strategy to be sustainable, we have to deliver it in a profitable way. There is no way to speak sustainability without profit.
The world's energy system is in the foothills of a major and potentially tumultuous transition, moving towards a net zero future while simultaneously meeting society's ever-growing demand for energy today. Perhaps few people understand this tricky handoff better than Patrick Pouyanné, CEO of TotalEnergies. Having taken the helm in 2015, Mr. Pouyanné has been leading the 100-year-old company through its own transition, from an oil and gas major to a multi-energy company increasingly focused on renewables. As Morgan Stanley's global commodity strategist, I was eager to speak with Mr. Pouyanné about how he is navigating this unprecedented period. So I traveled to TotalEnergies headquarters in Paris, where Mr. Pouyanné spoke candidly about the challenges and opportunities of providing reliable, affordable, and sustainable energy, both in the developed and developing world. Mr. Pouyanné, thanks for freeing up the time to do this with us. You are the CEO of one of the largest publicly listed energy companies in the world, and this is the year that Total is celebrating its 100-year anniversary. So I wanted to kick off the conversation not with a forward-looking question, but by a backward-looking question. If you look at the changes that are happening today, how would you put those in a historical context?
The world of energy is not fundamentally moving. We think that today we have a lot of challenge, but when we were born in 1924, it was just after the First World War, and because France realized that we were over-relying during the First World War of foreign suppliers. What is new is the sustainability part. Low carbon, less carbon, zero carbon. And in fact, for me, this transition is also a test, and we will demonstrate again that we can adapt to these new challenges. Of course, betting on our strengths, which is a capacity to produce energy at a low cost, affordable, to be a reliable supplier, but also capacity to innovate, to be pioneer.
By now, roughly a third of the investment budget is allocated to low-carbon alternative energies. It's a figure that runs at the moment the order of about 6 billion a year, growing into the future. There is a group who says this is not enough. Companies like Total need to move quicker. What would you say to that point of view?
I would tell them that, our mission is to provide energy to our customers. And today, the energy is mainly oil and gas, even coal. We don't provide coal. So our first mission is to provide an affordable, reliable energy. That's why we continue to invest in oil and gas. Why? Because if we do nothing, the world production will decline. You have a natural decline in the oil fields, 4% per year, more or less. So if we don't invest, then the supply will diminish and then the price will go to the roof. We've been through some energy crisis in 22 because of Russian war, and we see of the customers are not really happy when energy is going up. So we need to manage this balance, and we need to investments. It's a capex-intensive industry. At the same time, we are engaged in the transition. That's why, by the way, coming back to the history, when we become Total is a world. Then we are TotalEnergies with an S because we move from origin, which is oil, Total, to oil, gas, and electricity and other low-carbon energies. So it's maybe not enough, but it's a lot. Investing, compared to where we were 5 years ago, 1 billion, we have accelerated the transition, I think.
Because the alternative view is, of course, that there is an investment case in low carbon, but maybe it is not for companies like Total. You should stick to your knitting, focus on the core strengths.
And that view, I disagree. All the energies are interrelated. In fact, if you want to have a reliable electricity system, you need to combine renewables and the intermittency, some gas plants. We are in the gas business, so I see a continuity. I think the more we engage the company in adding this electricity, which is secondary energy, means also thinking to our primary energy, the oil, the gas, the renewable. So I don't see that as a problem. I see that as an opportunity to expand our competencies. And there is many cases where we can demonstrate that if we want to lower the cost of renewables, you need to think large projects. One of the main drivers for moving the strategy and moving from Total to TotalEnergies is also our people, our staff, because they are creating the value. They were asking themselves questions. If we stay in oil and gas, what is our future? Since we have enlarged the strategy encompassing low carbon, electricity, they see their futures. And I think it's a huge asset to be successful in our strategy as well.
If you think about the low carbon investment case for Total, and you think about the company's competitive advantages, how would you summarize that in a way that encapsulates Total's sort of positions, prospect in that area?
It's quite clear we have a clear axis, which is electricity, electrons. So the electricity, why? Because the best way to decarbonize the world is electricity. You need to electrify the processes. So if we are good in electricity, we'll be good tomorrow to produce green hydrogen. But green hydrogen is 60% is electrons. So we have decided that this is where we wanted to become an integrated power and to look to electricity not only as a renewable developer, but to look at it in an integrated way like we've done historically in oil and gas. We produce from renewables, from gas plants. We then store batteries, flexible assets to manage the intermittency. We'll trade all that. And then we'll have some B2C, B2B customers so along the value chain. That's the fundamental idea. You have other low carbon energies, of course. Some of them are coming from biomass. This is quite obvious when you have refineries. To move from a refinery to a biorefinery, you can reuse some of the assets. But the magnitude of this market is not as big as the one coming from electricity. Because at the end, we have a real ambition, which is to transition TotalEnergies. That's why integrated power now accounts are published quarterly, because it's the core of our transition.
What strikes me about Total's strategy is the consistency of it. It looks like the oil industry sort of engaged with alternative energies, but sort of trying to find their way, calibrating the strategy. And Total has been quite consistent in that.
Martijn, we are called TotalEnergies for your questions. So, no, I mean, that's why we are consistent, by the way. It comes from first strong alignment with the board. The board clearly support this strategy. And second is because energy investment time scale is quite long, you know. If you begin to change, you could spoil the money. So it's better to engage and then to do it at scale again. So I didn't mention when we speak about the history, in fact, it's a company which has been led by only 9 CEOs. I'm the number 9, which proves that we have time in front of us. I think it's fundamental to keep a sort of consistency. And again, we are demonstrating, by the way, that we can be profitable in this power, electricity, integrated power business. I need time to deliver it. Maybe I've made discoveries in Namibia, but the profitability will come after 10 years. You need to develop, explore, appraise, develop. So if we move every morning because the oil price is going up or going down, that means that your strategy is not yet mature and you have little chance to deliver something profitable. So consistency is very important.
I also want to ask you about natural gas, and particularly LNG. What do you think is the role of natural gas going forward?
I remember when I joined the industry, when we were exploring the risk of the gas, you know, because gas is more complex to monetize. But in the meantime, I would say more and more countries have access to LNG, liquefied natural gas, which is a global commodity. TotalEnergies was engaged very early, in fact, in LNG, in Indonesia in the 70s. Then we moved to Qatar, where we were among the pioneers. And it's true that it's a more expensive energy than oil or than coal, so you need to convince your customers that it's a combination. The right way to deliver a 24/7 reliable electricity is to combine renewables and gas plants because gas is flexible. Even if it's a fossil fuel, it's not low carbon. But when you compare the emissions of a gas-fired power plant and a coal-fired power plant, you divide the emissions by 2.
Also wanted to ask you about oil. Very quickly, we talk about Namibia, where the company has made a very large discovery. A lot of the oil will actually be produced in the time frame 2030s into the 2040s. When you make investment decisions over that type of time frame, how do you go about that?
Let's be clear. I know that there is a debate in newspapers about when the peak oil will come. In fact, the peak oil is not so important. By the way, for the time being, we continue to have a demand growing by 1%, at least 1% per year, so I don't see that. But in fact, as I told you, as the natural decline worldwide is 4% per year, the question will be when we will observe a decline of more than 4% per year, because then the question is relevant. The second answer to you is that I'm not Saudi Arabia. Deepwater in Namibia does not have 40 years in front of it. You know, when you launch the development of Namibia, it's deep offshore. Generally, you have captured most of the value in the first 8 to 10 years. You know, I have no problem to invest, providing 2 conditions. The first one is low cost, which is positioning our projects in the second quartile. The second condition is that every project should have lower emissions. So it's a virtuous circle. We engage capital in oil projects if we have low cost and low emissions.
When you say Namibia, very quickly you say sort of the emerging world. How do you think the energy transition will play out in the developing world, and what opportunities does that create for a company like Total?
TotalEnergies does not look only in the electricity to Europe or to the US. In fact, we have quite an interesting portfolio. One of our big share is in India. And today, in fact, we are building our largest project in our portfolio is in northwest of India, where we are building a 30 gigawatt solar and wind plant, massive renewables. And it's fundamental. That's a strong contribution to the transition strategy, because India's only resource is coal mainly. So if we don't intervene, if we don't bring gas, LNG, if we don't push on renewables, India, with 1.5 billion people, the most populous country in 10, 20 years, would not be at all a solution, would be even a big problem. So companies like us, we can engage in these countries, and we are doing it. So it's not only OECD world, it's also emerging countries. In these countries, there is a lot of energy, but people have a lack of electricity, which is a big political issue. And so it's also a way for us to leverage this strategy. We leverage this electricity part, which is providing energy to local people, with the fact that we are also producing oil to export it.
You've now been in this role around about 10 years, and the energy industry has had many periods that were tumultuous, but the last 10 years have definitely, even by historical standards, been very tumultuous. How do you reflect on that?
The consistency is important. My predecessors have built a company with a very strong balance sheet, which allow us to go through crises. We've been through quite a lot of crises. The oil price went down when I became CEO. The idea that the price will never go under $80 has suddenly disappeared, so we had to come back to our fundamentals. And in fact, from this crisis, I think we have really built the roots of our strategy of today. So the agility of the company has been demonstrated, and we'll go through many years like that.
That's a nice segue into my last question. If you look at the next 100 years, it's a very long period, but do you have a vision for the long-term future of the company going forward? What would it be?
I think we will stay in the energy world. It's our world, it's our DNA, building energies. But you know, we have engaged heavily in this transition. But again, the energy is an evolution, but it's plenty of opportunity for us to build and to contribute heavily to the world. Because when you are an energy company, really, you are providing a good which is absolutely necessary in the life of people. So that's why people are motivated. And our investors should trust that the fundamentals of the company will remain for decades to come.
Wonderful. Thanks for this conversation. I think we covered a lot.
Thank you.
Thank you.